Welcome to Striking Options. The show reveals the options you have to better navigate markets. I'm Jeff Kilburg, and I'm joined today by Bob Icino. Welcome, Bob.
Thanks for having me again, Jeff.
Well, pretty exciting stuff, and it's hard to believe the holidays are nearly upon us, but what are your expectations for the rest of this trading year?
I think outside of some sort of fantastical trade deal, especially in the on the equity side of things and all risk assets, I think status quo. I think the rally continues.
So once again, we're all focused on the trade tariff conversation between U.S. and China.
Yeah, I mean, we're looking at some seasonality. Typically, stocks do rally in toward the end of the year. Got the wild card of the trade talks.
All right, great point. Well, let's get this first lightning round, pal. You ready?
I am ready.
Crude oil. Well, we haven't talked about crude oil in a while, and it's really been kind of tracking the global growth sentiment. As equity markets continue to move higher, we have seen crude oil creep higher, but it hasn't gone above $60 yet.
Now, staying within that range, operating at the upper end of the recent range. OPEC recently said demand is going to fall. So as a trade example, what I'd like to look at is selling the November end of month 62.50 call spread in crude oil. Selling at this call spread allows an investor at this point in time to collect about $130.
This makes a lot of sense. This call spread doesn't expire November 29th, next Friday, and the January futures is underlying future contract. What's interesting about the whole crude oil conversation is that here we are looking to see what's going to happen. There's an Aramco IPO. There's so many moving parts, supply, demand, but yes, you are talking about respecting the technicals and respecting the range.
Absolutely, and we're in a situation where refinery utilization doesn't seem to be catching up. We're at the upper end of the volatility range as well, trading about 35 or so.
Oh, that's great stuff. Let's move to the second lightning round. Are you ready?
I am.
Tired tech. Well, we talk a lot about FANG stocks. We are seeing just a sensational move higher in tech. We're seeing the NASDAQ 100 up over 30% year to date. So my question to you is, will this tech ever get tired?
I don't know. I mean, it should be the leader if stocks are going higher. And again, I do expect a small Santa Claus rally, but it could be a little exhausted.
Well, we talk about risk mitigation here a lot, Bob. And one of the things in the event you have a long portfolio that does have exposure to these FANG stocks, these NASDAQ 100 stocks, the trade example I want to utilize is buying a put spread. We talk about buying and selling put spread. In this example, Bob, I'm buying a put spread. And why am I doing that? Well, it's because of the volatility situation.
Yeah, December futures are the underlying of what you're going to look at on this debit spread. And I think mitigating risk with CME futures products, one of the good uses of these particular products.
Well, let's get into the trade example. I'm buying the end of month, same expiration as you, Bob. It's at November 29th, the 8,077.50 put spread. By buying those two strikes, that gives us a little bit of ability to come down. I'm not overpaying for this potential pullback. But even if the event we see the market move higher, like you talked about, that Santa Claus rally, we are defining our costs.
Yeah, what I really like about this is volatility has been kind of trailing off as we get in toward the end of the year, as we get positive news on the trade talk. So it's a good time to look at the buy side of the option world.
In the December futures, they were trading in between the 82, 8,300. They're always moving here in the NASDAQ 100. But spending $130 in the event we do see something go awry in these conversations in U.S. and China, this is risk mitigation, Bob.
Right, and you could also use the micro E-mini NASDAQ and just get short a smaller amount with the smaller tick size in that product.
And remember that those E-mini NASDAQ, that is 1/10 the size. The micro E-mini NASDAQ is 1/10 the size of the bigger contract. So Great stuff as always, Bob. I want to thank you for coming on to Striking Options this week. And please tune in every week as we will continue to strike options.